interesting times we are in. Prashant Paroda is now joining us. He's portfolio manager at Allspring Global Investments. They're large investors here in India and emerging markets as well. Prashant, thanks very much for joining us. I think it's late for you, it's early for us, but good that we can connect again. So US, of course, I mean, is looking good, but here in India, and you look at Indian stocks very closely as well. The story has been one of earnings slowdown. So earnings have slowed down. There is this rise of China at the margin a little bit, and we've seen so much FII selling, almost 4,000-5,000 crore rupees every day. So my question to you, Prashant, is: Are we coming to the end of this episode of selling, or how do we decipher that? And what will it take? At what market levels will the selling start to abate a little bit?
Well, I think for some stocks, we might be coming closer to the end of it. I think it's all become a game of expectations. So as you can see, there's some stocks where the earnings are below expectations and the reaction is pretty bad. But there are pockets in India that haven't really done well in the last 3-4 years as well, where expectations are benign, and as you look forward, if those companies continue to perform, I think they'll continue to do well. With regards to the FII selling, I think it's just been a little bit of repositioning, and now that we have the President Trump is coming back to power. I think longer term, if U.S. fiscal deficit continues to stay high, it should be negative on dollar perspective. So from a longer term, I think it's positive for EM, but the caveat being that President Trump's election plank was running on trade. And if he's going to reopen issues on trade, and now he definitely has a mandate for that, that will have some repercussions for the EM asset class per se.
So Prashant, structurally, the outlook for emerging markets is fine. But in the near term, you spoke about the risk of the tariff. So tactically, any changes that you're making to your portfolio?
No, I think we have to clearly, I think at this point, President Trump has been a game changer for trade per se. And his idea of America first, he's put in tariffs. A lot of those tariffs were kept on by the Biden administration as well. And actually for EVs, Biden administration increased tariffs as well. So my sense is, this is a pocket of opportunity for India as he renegotiates tariffs with China. And India and China are two democracies that, US are two democracies that can work together. And some of this low-end manufacturing it's already moving to India, but it should expedite the process. So I think this is kind of a once-in-a-generation opportunity for both President Trump and Prime Minister Modi to solidify the relationship further. And with regards to China, I think he will definitely renegotiate with President Xi Jinping there. And the question mark is at what tariff levels they will actually agree on. So, a lot of these things can happen very quickly at this point. He has the mandate from the Senate. It looks like he will also get the mandate for the Congress as well. And I think he has this 2-year window to sort of reassess a lot of these situations. And my sense is that he will also be open to a lot of these foreign companies setting up plants in America. I think they will be high-end manufacturing will definitely be moving. Some of it will be moving to US. The question really is where the other parts of manufacturing go and where India has a role to play and a big role to play. So I think given that the equation between President Trump and Prime Minister Modi is great, I think this is a kind of a once in a generation opportunity to cement this relationship from India's perspective.
All right. Hi, Prashant. Good morning and good to see you in. This is Nigel on this side. As you mentioned, the US dollar could soften from here on, which will be great for emerging markets because of a higher fiscal deficit in the United States and also the Fed rate cuts. So, but we have seen in the past that India has been the outperforming market for the last 4 or 5 years, while China has been underperforming. But the last 2 months, China has come back. In the near term, do you believe that China can still outperform? Or would you say you'd rather stick to the Indian markets? We're already down close to on 7-8% from the recent peak.
Yeah, I think, China, obviously, people are, the expectations were very low, P levels were very low. So, and now there's some stimulus. So it seems like the Chinese government is kind of trying to address a lot of the issues that the economy is facing. But I think structurally, longer term, while there could be near-term adjustments that people are playing, I think longer term, it's very hard to be very bullish on China at this rate. I think, the tariff headwinds are there. I think if you read Bob Lighthizer, who was the trade representative, he wrote a book, No Free Trade. If you read his trade, he talks about actually decoupling from China. And longer term, I think it's hard to make a case, but near term, clearly, I think given the valuations are
Yeah.
low and people's expectations on fiscal stimulus are there, it might
Yes.
still run a bit. But I think structurally, longer term, it's
Right.
hard to make
Got it.
a case.
Very quickly, Prashant, you said a couple of these stocks could be approaching the near-term bottoms in the Indian markets. Which is the top sector? If you could name a couple of stocks that are quite bullish on in the Indian markets.
So I think, the private banks haven't really
Yes.
participated much, right? And, SBI has done well, the public sector banks have done well. So again, I think in Indian markets, it's a game of expectations. I think the easy money that was made post-COVID and the revaluation trades, they've all occurred. So now it's question of, whatever the earnings estimates for next year are, whether, some of these banks can meet or beat them. And I think, you have to kind of play very selectively in the Indian market because there's some parts of froth that will come off, and it's come off pretty quickly. So you have to be very selective in pockets, whether it's, pharma and whether it is, private sector banks as well.
Okay. All right. Pharma and private sector banks are areas which you are more comfortable with broadly, valuation-wise.
Yes.
Got that. Prashant, thank you very much and hope to see you again soon. And we'll continue and pick up on some of these points that you made. Thank you for joining us right now.
All right.